Hi, and welcome to the Stockscores Market Minutes for October 10th, 2014. With the recent turmoil in the market, I thought it would be nice to talk about how to trade a correcting market. The easiest way to beat any market is to trade the hot sector. In a correcting market, the hot sector is fear. There are a number of ETFs. The VXX is the most liquid. The inverse of the VXX is the XIV. And then you have some leveraged versions of the VIX, which is UVXY, TVIX. These are all ETFs that trade off of fear, namely the fear index, which is the Chicago Board Options Exchange VIX index, based on short-term futures contracts on the S&P 500. This thing moves really wide and with a lot of liquidity in a correcting market. The great volatility, very predictable trends make it a great instrument for the savvy active trader to capitalize on a correction. Now, if you can't trade that way, if you don't have the time to watch the VIX closely through the day, then my recommendation is just sit on cash. But if you have the trading skills and the time to trade the VIX during the day, it's definitely a hot trader. Just look at the moves of the last 15 days and you can see how much volatility you have, but also how orderly the trends are. You know, it's up, it's down, it's up, it's down. It just bounces back and forth. And with those wild swings every day, it's pretty easy to trade in and out of it once you get the hang of it. All right, let's talk about the market, because obviously with the selling pressure this week, many will be wondering, is this the beginning of the end? Well, it is certainly a break of the, I would say, shorter term upward trend line, but shorter term being a 2-year upward trend line. That's the top line right here. You can see that we've broken down below that line. It's held many times in the last 2 years, and that tells me we are likely headed toward the longer term upward trend line down around 180 on the SPY. That's about a 5% downside from here. Now, don't forget that often markets will make a falling top before they go to 180, so it wouldn't surprise me if we cruise back up a little bit, but I think that will be a sucker rally, and ultimately we are headed toward that 180 mark. My hope is that it happens very quickly. In the next week or two, we get a sharp sell-off, move down to that way, trade the VIX for a couple of weeks, the market's going to bounce, and we should be back into a bull market trend. And certainly it'll recharge buyer interest and really make the stock market a lot better for everyone. The IWM has been the weaker of the U.S. markets over the last month or so. You can see it has formed that falling top and it broke down through support this week. It doesn't have as far to fall until it hits its longer term upward trend line, more like a 3%, perhaps 5% drop. Probably, unless it happens real quick, it's a 3 or 4% drop on the IWM. But again, that's a head and shoulders top. You can see here a shoulder, a head, and then the right shoulder breaking below the neckline this week, and that should take us down here. Now, certainly it could be a bigger pullback than that. We could be in the start of a bear market, but at this point, it does not yet look like it. The TSX has really been getting hammered the last 4 weeks, mainly on the strength of the US dollar, which takes money out of commodities, and of course with the heavy weighting of commodity stocks, namely oil and gas and mining stocks in Canada, that market has really been beat up. Now, we are near some support. I think we probably start next week with some weakness, but very likely that we will get a bounce. Why? Because gold is at support and started to bounce this week. Oil is very near support, heavily oversold. I think there's an opportunity to bottom fish some of those mining, gold mining, and energy stocks this week in Canada. Remember, Canadian market closed on Monday for the Canadian Thanksgiving weekend, so we won't be trading again until Tuesday, and that could mean a gap in the Canadian market. If the U.S. market moves down a lot on Monday, or up for that matter, we'll get a gap in the Canadian market just because it tends to follow along. So it's a little bit of a tricky thing to trade over the long weekend, but I do think the Canadian market is due for a bounce short term, although certainly the break of the upward trend line is something to be worried about. TSX Venture, ugly with a capital U, it has broken long-term support. There is no money here. There's a lot of opportunity, again, in the TSX Venture stocks. Some of these stocks are trading for less than their cash value, but you don't want to try to catch a falling knife. Wait for the market to show signs of turning. First a a break of the sharp downward trend line, then the build of a rising bottom, and then a break from a rising bottom. Look for that more on the daily or even the hourly charts of the TSX Venture Exchange. The weekly that I'm showing here is going to be a little too slow, I think, for that turnaround. TLT, which is the U.S. Treasuries, moving to new highs this week, interest rates going down. All of this is good for the consumer. Lower interest rates good for the housing market. Lower oil prices good for the consumer driving his or her car. So those things are going to give some support to the market longer term once the emotion of this pullback has run its course. U.S. dollar, the culprit in the weakness in commodities, hit resistance. We talked about this last week, and just as I expected, it fell back this week. It has not really given the signal that it is reversing the long-term strength. Simply, it is stalling at this point. If we now build a falling top and then break down, and again, the weekly chart doesn't show you the detail that we need to see, watch the daily chart or even the hourly chart of this, the UUP, and if you start to see this market build some falling tops, break some upward trend lines, good chance the US dollar pulls back further. GLD, the gold, right at support. Pessimism into this, so there's no reason to think that we can't break that support line relatively soon in the next month or two, but for now it does look like it's going to hold. I think we see a little bit of a comeback rally in the gold and many of the gold miners in the short term, but treat it like a trade. Don't get married to this idea because I don't think it's a long-term idea. It's something for the savvy trader to take advantage of what we refer to as the dead cat bounce. Oil due for its own dead cat bounce because it is nearly at support, the horizontal green line that I have drawn, because the market is moving down and away from the downward trend line, really a parabolic trend to the downside, indicates to me that it is emotion that is gripping the oil market and not rational selling. Could have some more weakness next week, but I do think the oil market is going to bounce. Energy stocks heavily oversold, parabolic to the downside, many of them approaching support, so due for a bounce. And I do think there's a real opportunity to pick up some of these energy stocks, particularly some of the Canadian energy stocks that pay a good dividend. Some of these things are yielding 6-7% right now, some even over 10% because of the downdraft in prices. Now, no guarantee they're going to pay the same dividend going forward. Certainly lower oil prices hurt their ability to do that, but I do think that these stocks are due for a bounce, and I've been looking at many of those this week. And finally, the VXX, the old fear index, breaking to new highs this week. Again, lots of action in the VIX. I've had some fun trading this this week, and I expect that that will continue. Even if we don't get any further selling, eventually the VIX is going to move back down, and in that case, we trade the XIV, the inverse to the VIX, which will go up when the VIX goes down. For now, the VIX has upward momentum, and so the trades tend to be dominated by the long side, but that can change very quickly on this. What I love is the volatility in the VXX. So my outlook, US stocks bearish on both time frames. Could see a little bit of a bounce back next week, but I think we're headed 3 to 5% lower. Canadian stocks bearish, but it is getting to that point where we are supporting or getting into some support, horizontal support. And I think if the US dollar continues to pull back a little bit, we can see the Canadian market bounce before the US market. Gold, I've got my rating at neutral here because we are at support and bouncing. Oil, I've put my long-term rating at neutral because we are very near support and it should bounce. My short-term rating is still bearish because I need to see the signs of that bounce. So wait for the short-term chart on oil to confirm that support is going to hold. The long-term upward trend line for equities has been broken. Expect 3 to 5% further downside to support. Canadian equities are more likely to bounce first as they have suffered the most from a strong US dollar. Gold at support and trying to hold, oil nearing support and heavily oversold, due for a bounce. Fear is rising and it is very tradable right now. Well, that has been the Stockscores Market Minutes for October 10th, 2014. Have a great week in the market and trade well.